And Sarat, you said you were looking for good growth from Morgan Stanley. It looks like you got it.
We did. I mean, Morgan Stanley, I think, is now the blue chip here. If you look at their wealth management business, and I know it was a little below what they expected, it still did really well. Investment banking did really well. And they don't have the other issues that some of the other banks might have in terms of credit. So I think this bank over time re-rates. They doubled their dividend this year. And I think, going forward, they're in the right areas.
You own this stock?
I do. We own this stock. I own it personally. I think management's done a great job. And I look for even better things for them down the future, especially with the acquisitions that they just made with Eaton Vance and E-Trade.
Let's talk about the other banks we got back today. Wells Fargo, you don't own that one. You think it's cheap for a reason. What did you think of the numbers?
It is, and I think Wells Fargo, you really got to dig deeper. It's a restructuring play. They still have to deal with all the issues that they've got with the SEC, et cetera. I think there are other places to play. I think Wells Fargo is a good bank, but I think when they're all cheap at this level, there's much more upside in some of the other banks, like a Morgan Stanley, Bank of America, Citi, and JP Morgan.
Bank of America out this morning, too, and they had strong numbers. Your concern on one point is wage costs. Did you see anything yet in the release that gives you any answers on that?
Nothing yet, and I think it'll be interesting to see how they went about it, because one of the things that all these companies, like Bank of America, JP Morgan, are doing is spending so much on technology. That technology productivity will be a huge positive if that can actually overlay the wage prices. But Bank of America hit it out of the ballpark. I mean, they did really well in interest, growth. They did great in terms of loan growth. They did great in banking. So I think they really performed as well. And these stocks are all trading at 12, 13 times earnings. The market's trading at 20. They can either grow with their earnings or they actually get multiple expansion. Either way, I think investors are going to do well in the next 12 to 18 months.
Hey, Amy, you have seen some short-term call buying when it comes to the financials ETF. What is that telling you right now?
Yeah, good morning, guys. It's interesting because, kind of in the 1 month tenor, we saw call buying in XLF. Obviously, there's a slew of earnings, not just Morgan Stanley, that's kind of weighted to the beginning earnings season. And then specifically for Morgan Stanley, it kind of looked very similar to XLF in terms of how the options were set up. One interesting thing I would tell you, though, is when you look at the later tenors, Becky, like 3 months through 12 months, both in financials as well as Morgan Stanley, you're starting to see that, put call skew rise. So we're seeing that demand for protection out in the further months actually get higher. People seeking more protection, longer dated in financials as well as Morgan Stanley specifically.